Welcome to another episode of our Capital Ideas podcast, where we get to know the people behind the portfolios. We meet with portfolio managers and analysts, hear some of their ideas, lessons learned, their investment edge, a bit more about Capital Group. Today, I am thrilled to have Martin Romo. He's our chair. He's our CIO. He's a portfolio manager. He's my friend. We're going to get into it. Martin, thank you. So you are a lifer. You've been here 32 years, and you came as an intern way back when we called folks interns.
Yes.
How'd you get here in 1992?
Well, for me, it's a little bit of a twist and turn story. I started studying architecture undergrad at Berkeley. And in the midst of that, I realized I didn't like my professors who were architects, and that felt like a bad career choice. So I started taking real estate classes. Pivot from there and said, well, I've got to be close and I'll do real estate. That turned into an interest in finance. And I applied to business school, went to business school with the idea of getting into real estate finance. And fortunately for me, Capital came on campus as a first year. And we're starting up an internship program for the summer. And so I got an opportunity to come to Capital, and one of the many lucky things in my life, ended up getting a full-time offer and started in 93, so 32 years ago.
So something's gone right relative to all the roles we've asked you to do and your portfolio management skills. And CIO, Chief Investment Officer, we're different than folks in lots of ways of how we manage money and how we think of long-term. But can you describe your view of the role of CIO here relative to elsewhere?
Well, Mike, as you said, we do a lot of things differently. And the big differentiator in terms of how we take on that obligation from our clients is called the Capital System. It's got three important pillars. It's about collaborative research. It's about working with diverse group of folks and thinking long-term. And so the role of the CIO at Capital is about making sure that is cared for and that health of the capital system across all we do, from equities to fixed income to a solution, that the capital system is at the core of all our services, and we've got the right talent, the right tools, and the right structure to get the job done. So that's my job as CIO.
So it's cultural. It's not telling us what Chinese GDP is going to be next year and trying to say we should be 4% overweight or underweight X or Y. It's cultural about the health of the system of capital.
Very much true, Mike. And you know better than most that this is a process that's bottom up. We really rely on our individual portfolio managers and analysts to make great decisions. And it's not about my top-down house view as to what markets are more attractive and bonds versus equity. There isn't that capability at Capital because we really rely on that bottom-up decision-making that makes our results over time align with our clients and make sure they reach their goals.
Yeah, it's so important. Just the health of the ecosystem around investment management. It's I like how you define it, and I especially like just how different it is. It points out how Capital Group's so unique. I want to talk about two other roles you have. One is your chair role, and the other one, which you don't know you have, but I think of you as our chief historian. So talk a little bit about that. I've heard you describe it as the Lovelace legacy, but you often talk about our history. You research our history more than anyone. So share about that before we get into your own portfolio management.
As you said, we've got a lot of history, and I am a student of our history because it is really where we've come from that informs where we're going. And I really think about that Lovelace legacy in three important chapters, and I'm reminded of that great Greek, saying that says, great societies grow great by those elders planting trees they'll never benefit the shade, they'll never sit under the shade of.
Right.
And I think the Lovelaces did that for us. And it started in 1931, where we took over Investment Company of America during a depression and a bear market. And Jonathan Bell Lovelace had an obligation to those shareholders in taking over that responsibility. And he said two important things. If we're going to do right by them, we have to have great research. We have to think long term. That was our first chapter of the Lovelace legacy. The second one happened in the 1950s. And that's when we were facing a succession issue. We had been run essentially by one person and a committee. And we were worried that Jonathan Bell Lovelace wasn't going to be around. And we had a debate. So out of that came the capital system. They took the research element, they took the long term and said, we could benefit from a diversity of perspectives. And they created the structure and platform that it's enabled us now for almost 70 plus
And that was
years.
1958.
That was
right?
1958. And so we're still living off that platform. But Mike, there's one last element to it that I think a lot of us tend to take for granted. But they made an important decision at that point to share the ownership of the organization and maintain our private structure. So there's never a debate what job one is. It's the clients. And secondly, that idea of collective effort, that together, if we do right by our clients, we win together. That's a remarkable testament to their foresight, the families thinking about the greater good in almost all they do. And so I feel incredibly honored to maintain that legacy. All of us that work here feel like it's our job to pass the organization in better shape to the next generation.
Yeah, and both Rob Lovelace and Jim Lovelace are still at Capital Group 40 plus years into their tenure.
Each have been more than 40 years, and each part of their legacy, their grandfather, their father spent more than 40 years in the organization. To do that and to share the benefit of our extraordinary success on behalf of our clients is a remarkable testament to them. And it's really an honor to live up to that legacy.
I do want to pivot to markets. You're a portfolio manager, putting on your fourth or fifth hat. You're a portfolio manager. You've been an investor for more than 30 years. What do you think in the markets today that folks misunderstand? Where are there opportunities? And again, we think long-term, so looking out 5, 10 years thematically, what are some of your views?
Well, Mike, I think we've come out of such an extraordinary decade that it's easy to think, well, you've got to focus on a handful of companies, and that's all it matters, and really kind of one country, which is the US. And I think folks don't think enough about an and market. It used to be or. You held the Mag 7 or something else, and that never paid off. And the world is broadening, and it's got opportunities around the world.
So and means it's the U.S. and so it's not just 7 stocks.
Companies outside the U.S., outside of technology. There's so much great opportunity and so many ignored opportunities that it's really a target-rich environment. And for a place that really leans into our research all around the world, it's a target-rich environment as a portfolio manager. And if I add another and, don't forget what's happening in technology because it's profound. And, we've gone from 15% of the world on the internet to almost 80% of the world. Some of these companies have billions of daily active users every day coming to visit their site or their service. You add to that exponential growth, which all of us have a hard time understanding. And if I just take artificial intelligence, one of the metrics they use are tokens. How many tokens does the model have? And the cost of a token. The cost of a token at the end of 2022 was about $1. That token costs 1/3 of a cent. So you can get 3 of them for a penny. That's remarkable progress in a very short period. It took semiconductors 15 years to do the same thing. So it's that tremendous scale with the pace of change that means you've got to pay attention because the changes happening in that industry are affecting most other industries.
So you're the and as opposed to the or, saying opportunities outside the U.S., owning non-dollar securities, owning great companies regardless of where their headquarters domiciled. That's secular. That's not a cyclical thing. That's a secular opportunity.
That's a secular driver for change all around the world. Big companies, small companies, taking some of the lessons we've learned in the U.S., thinking about companies that are benefiting or suffering outside the U.S. and vice versa. So it's really a remarkable period of innovation. And I've touched on technology, but there's innovation happening in healthcare, in transportation that requires us to maintain focus both on the big things and on the smaller companies where there's opportunities arising.
So how easy or hard is it for you or anyone else in the investment group to balance the short-term noise? Because there's unlimited noise. Every day something else comes up. And so how do you balance the short-term noise with the long-term opportunity? We're investing in the number one driver of the quantitative bonus outcome for you and any other investment professionals, the 8-year number. So that helps.
Helps a ton.
How do you see through that haze of all the noise and say 5, 10, 15 years from now, these companies are different. They have a moat built around them. They have this great advantage. How do you do that?
Well, Mike, I really focus. I had the benefit of really being a research director. I covered cyclicals in the chemical industry. I know where we're really good. We're at the what. We're in the what business, not the when business. And for me, short term is always about when. When is the Fed going to cut? When are the tariffs going to be implemented? You can go down the list of whens. When shows up at the front of a decision, usually it's short term. We're really good at what. Our analysts stretch their time horizons, our biggest bonus opportunities on an 8-year basis. Really tune in to what they're saying and how the future is going to unfold based on their expertise. And I really tune into the moment they change that outlook and pay attention, try to understand it. So I think about a strike zone. I narrow my strike zone. I take all the when out and I just listen to what as part of the thesis. And we've done a great job identifying those big opportunities.
And those are just big inflections as well.
Yes.
So the quarterly noise is part of the when.
The when. And you look at the quarter to reinforce the what or to tell you the what seems a little different. But I really trust our analysts. They're on the ground. They know the companies, they know the management teams, and they know what's going to matter in the future. And they work together. So it's not just one analyst. We have these industry clusters. They form globally. Sometimes there's multi-clusters who have opinions about what's going to happen. Retail is a good one. It was our technology group, but our retail group that came together and said, the world's changing for retail. And guess what? That was 20 years ago, and we're still in the midst of that change.
Yeah. These are the big boulders
Yes.
that you're talking about. Let's get to your edge as an investor. It's something you do, hopefully on a regular basis, that makes you do better than others and better than the market. So what is your edge?
Mike, my edge comes from being a research director and really understanding that every analyst has their own edge. And so I play the players, they're on the field. And so I tend to hone into what I think an analyst is really good at and just wait for that. And so I tend to be patient. I have the benefit, as you said, of having a few other hats in the organization. And that helps me narrow my attention and high grade to those changes where they do think the world's going to be different in the future. And so it's growing up in the research group, being responsible for hiring and developing our investors that ends up with me really relying. I don't read anything from the outside of Capital's four walls. I really rely on our instincts and our long-term perspective to inform my portfolio. And I've let that just narrow my focus. And so I have only about 35 holdings in my portfolio. And that's based on what I think our analysts are the highest conviction and what they're best at. So for me, that's the edge.
So few number of holdings, low turnover, high conviction, and you're an analyst of the analysts.
Yeah. That's a good way of putting it. Yeah.
So talk a little bit about lessons learned, the humbling part of the podcast where, and you can pick a lot.
Do we have an
and we
hour?
all can.
Do we have an hour?
You're on the couch. Tell me, Martin. But tell me about one or two that just something that stands out in your mind over a 30+ year career about a lesson that you learned that's super instructive.
Be yourself. You know what you're good at. You know what you're good at, and you know how you can bring something different to the table. And that's that real reliance on diverse perspectives and finding what makes you unique. So that's the first lesson. But I also worked and covered financials through the GFC. And the big lesson there is leverage, 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 beware. And there's probabilities, there's outcomes, you make your best guess and you'll make mistakes. But the error rate with high leverage means there's an existential threat could happen. And so I've just learned that leverage is a big warning sign, and be careful for companies that have a lot of leverage, that your margin of error is a lot lower. So I've been pretty disciplined since then about trying to avoid that.
And along the lines of lessons learned, sometimes you figure it out on your own through mistakes you make, and sometimes people are in your ear whispering. Who were some of those mentors who whispered in your ear along the way?
Well, I had the luck of having multiple mentors, but there's two specific groups of folks that taught me a lot about being an investor. When I first joined in our unit, there were 3 portfolio managers: Dina Perry, Jim Drasdo, and Gordy Crawford. Contrarian investor, thematic investor, and a growth investor. And watching them work together, play off of each other, I've described this before, it was like watching a jazz band. Really remarkable. And knowing how different they could be, but work together, was a really important lasting impression on me as to be yourself, work with others, and work to play off of each other's, but ultimately it's your decision. And then the second person is Jim Rothenberg. I worked really closely with our former CEO. It's been 10 years since he passed away. But the benefit of watching him, who had a lot of hats as well, and how he leveraged the lack of having full capacity to focus in and hone in on the analysts. What I've described about my process is a process I watched him utilize so effectively. And so I learned a lot from him. And my favorite quote, as someone asked him about a market outlook, this is back to what we don't do. He said, we don't predict the rain, we build financial arcs for our clients. And I think that's just such a great mindset for any decision we make in the portfolios on behalf of our clients, and reminding us what we really do and how we deliver value long term.
Yeah, I love that quote. That's a great quote. We just recently launched a series called The Power of Advice, and trying to find folks from different walks of life who've been super successful in whatever they did, and then successful again in reinventing themselves. Larry Fitzgerald, famous NFL wide receiver, was our first guest. He did a fantastic job sharing advice. This isn't that episode, but what's your advice? Like, what if you have a piece of advice for one of the younger analysts who comes in and they come in your office and say, Martin, you've been in some of these wars. What's your number one piece of advice for us? What would you tell them?
If you were a new analyst or you wanted to get into the investment game, I guess what I would say is, first, learn from the greats. Read Benjamin Graham, read Fisher, read Buffett, read their letters, read their books. There's science and there's art involved in investing. Second one would be learn from history. When I sat down, and actually Jim Rothenberg had covered the chemicals, he put down before me a book, a 30-year record, and it was all stock charts back when we didn't have computers. And he said, take the chemical companies out and tell me the story of each of the companies, 30 years. And if you can go back and do that in companies you're interested in, it goes a long way to understanding how markets affect them, how economies affect them, and how they made good decisions or bad decisions. So study history. And the third one, Mike, is learn how to tell a story. Storytelling matters. And you have to convince folks as to why your investment is compelling or risky. And I think the art of telling that story and getting to the heart of what's a concern and then overcoming that concern is just really an effective way of honing your thesis and making sure you're getting at the heart of an investment opportunity.
So that's combining EQ and IQ. The ability to have your conviction, to understand why you're going to invest in a certain name, do all the quantitative and qualitative work that gets you to that conclusion, and then communicate it.
Right.
It's hard to scale if it's not communicated, and other folks join you in that journey.
And they're not separate. I think you're right, Mike, to put them together, because ultimately the market is an emotional thing. You've got to understand what it's worried about or excited about, and then unpack that and say, do I have a different angle? And so I think that you're right. You've got to construct an argument, and that's part of an effective investor for sure.
All right. I want to pivot again and show the world what I stole from your office.
Oh,
in San Francisco. I think, and I did a little research around this, but I'm going to ask you to tell the initial story and explain what you're holding in your hands for folks, which is a remarkable story. So please share that.
Well, thank you, Mike. This is a near and dear part of my office, and it has so many layers to it. But first and foremost, my dad was a fire battalion chief. He spent 25 years in Sacramento in the fire department. And in addition to that, he was an artist. And so at the Capitol in Sacramento, there is a monument to fallen firemen. And this is my dad's statue. And it's called Fallen Brother. So For me, it's a reminder of my dad, first and foremost, that he was both a leader and an artist. So it's an inspiration to me. But as a fireman, as most first responders, the sacrifice, the sense of duty, and the real risk they take on our behalf, I think it's just something for us and for me as a leader to remember. The world can go sideways, things happen, markets go up and down, but staying calm, clear-eyed, and a sense of purpose and duty and service will always hold you in good stead. So thank you for the reminder.
Well, you should be super proud. I was looking on the internet this morning, and if you type in, and people should do this, if you type in California Firefighter Memorial and you type in fallen brother and you ask about Jesus Romo, there's a great YouTube video that your mom narrated.
Yeah.
That was, it was brought me to tears. So you should be super, super proud. And I'm glad you're able to share that story. Community. It is one of our 5 core values. You're very involved, as we talked about, in the capital community, but also super involved in lots of other communities where you donate time and money and energy. Share some of that with us.
Well, Mike, there's 2 big things you said: community and then educational support and access for us, for Lisa and I. Really important. We're involved in our local communities. In the Mission District, I'm part of a Jamestown Community Center, which is a hub to help kids between school and home. It's sports, it's education, it's tutoring. It's a great organization. Lisa's on the board of our local congregation, so that's an important community to us as well in San Francisco. But as it relates to education and supporting that, really one of the big organizations I've been a board member for a number of years. It's called the Basic Fund in San Francisco, and it's a remarkable organization that's completely focused on creating primary school tuition support. And it helps a number of kids go to school. And what it translates into is an incredibly high high school graduation rate, an incredibly high college rate. It's a remarkable organization that's helped over almost 30,000 kids in the Bay Area. And it's done it quietly, targeted, and made a big difference to those kids and those families. Well, so I'm a product of support primary school, high school, college, and graduate school. And so it's an important way for me to give back.
Excellent. We are going to end up, as we always do, with an obsessively grateful moment. I'll send you the mug back to San Francisco, but I'll ask you to hold it and share something, Martin, that you are grateful for. 1 thing, 2 thing, judgment-free zone, but what are you grateful for?
Well, Mike, so grateful to be here professionally, but personally, it's hard not to be incredibly grateful for the 3 rings of family. My parents, I'm the oldest of 6, how they managed to support us through our educational journey, but more importantly, that they gave us the license to do whatever we wanted. And that's an incredible gift. So I'm grateful for that. I then was doubly lucky in meeting Lisa, my wife, at 18 as a freshman at college. And we've been together now 40 years. So that's incredibly lucky. And I wouldn't be the person without her. And the third element of the person I wouldn't be without them are the girls and my daughters, and how they've made me a better person watching them grow up. So incredibly grateful to have such great family around me.
And you recently had a 35th wedding anniversary, is that right?
30th wedding anniversary.
30th.
Yeah. It's good you got that wrong and not me.
No, 30th. Mine's 32. I thought you were higher. All right.
No, just 30 years. We've been 40 years together. Yeah. And it's incredible. She's changed my life, and it's fun now to look back and with a lot of gratitude. Good luck, hard work sometimes pays off. So it's been a fun journey for us.
Well, you're lucky she stuck with you.
I'm
for that.
very lucky.
We're in the same camp on that.
Yeah.
But thank you. And thank you for joining us. Thank you for being the chair of Capital Group, for being our historian, our CIO, a leader, a portfolio manager, a friend. I'm just so happy. We waited to get you on here, but I'm glad you made it. And thank you for sharing all that.
Thanks for having me on, Mike. And thanks for everyone listening. It's a great opportunity to talk a little bit of myself, which I don't like. You know that.
I know that.
It's been fun, so I appreciate it.
All right. Well, thanks for joining, everyone. We appreciate it and hope you have a great day.